Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CHABAIDAO interim report. CHABAIDAO Industrial Co., Limited, offers a diverse range of businesses and services, including tea drink products, supply chain management activities, franchise management, marketing campaigns and operation, activities, production of biodegradable straws, and packaging, IT services and maintenance training for franchisees, logistics and distribution services. The company operates through self-operated and franchise stores under the CHABAIDAO brand name. The significant increase in CHABAIDAO's stock price over the past year can be attributed to several key factors. A major catalyst for this growth was the report of double-digit single-store sales growth released on May 20, 2025. This news led to a 15% intraday surge and a 7.28% closing increase in the company's stock price. The positive sales data provided a much-needed boost to CHABAIDAO's stock, which had struggled since its IPO debut in April 2024. The report of increased sales growth served as a significant recovery from the company's post-IPO lows, with the stock price increasing by approximately 72% from its low of $7.15 in August 2024 to an intraday peak of $12.30 in May 2025. Additionally, subsequent reports on CHABAIDAO's interim performance for the first half of 2025 showed a revenue increase and improved profitability, further contributing to a positive sentiment among investors. However, it was the initial report of double-digit single-store sales growth that directly led to a notable rally in the stock price from its earlier lows. The primary drivers of revenue growth or decline in a company can be attributed to several key factors. On the growth side, the sale of goods and equipment has shown consistent increases of plus 3.8% and plus 7.9%, while royalty and franchising have also seen positive growth rates of plus 2.4% and plus 5.1%. The introduction of new products and upgrades, improved supply chain efficiency, enhanced store operations, expansion of store networks, strengthened product R&D capabilities, increased product matrix development, and better supply chain coordination and delivery capabilities have all contributed to revenue growth. On the decline side, the loss of franchisees due to termination of collaboration has led to a decrease in revenue. Additionally, payment of prior year's profit distribution, granting of concessions to franchisees for the sale of goods and equipment, and deduction of franchise fees payable by new stores have also resulted in revenue decline. Net income and profit margins. A shift in performance. The company's net income has seen a significant increase of 39.4%, indicating improved financial health. However, this growth is not reflected in its profit margins. The adjusted net profit margin has decreased by 17.9% to 13.6%, while the EBITDA margin has dropped by 10.1% to 18%. This discrepancy suggests that despite increased revenue, the company's ability to retain profits has diminished, likely due to rising costs or inefficient operations. The company's financial performance indicates a significant improvement in its ability to generate cash. With an operating cash flow of RMB 280,295 in 2025, the company is successfully converting profits into liquid assets. This positive trend suggests that the business is financially stable and capable of meeting its obligations, positioning it for future growth and success. The company's debt level and interest expenses have undergone significant changes over the past year. Contract liabilities have decreased substantially, from RMB 219.3 million to RMB 158.5 million, indicating a reduction in financial obligations. Lease liabilities have also decreased, dropping from RMB 105.5 million to RMB 85.3 million. Furthermore, interest expenses on lease liabilities have seen a notable decrease of 23% in 2025 compared to the previous year. These changes suggest that the company has made efforts to manage its debt and reduce financial burdens, resulting in lower interest expenses. Management's outlook on company strategy. The company's management has outlined its strategic approach through various key points. Firstly, the franchise model will continue to be a crucial component of the company's growth strategy. Additionally, the company may adopt foreign exchange hedging strategies when necessary to mitigate potential risks. In terms of investments, the company is focusing on upgrading and expanding its manufacturing capabilities, as well as renovating office premises through property, plant, and equipment expenditures. However, it has no plans for material investments or capital assets beyond those disclosed in the prospectus. There were no notable acquisitions or divestitures in this financial period. The company's portfolio remained unchanged, with no significant additions or disposals of assets or businesses. The company's financial summary reveals that it has a history of paying dividends to its shareholders. This indicates a commitment to returning value to investors through regular distributions. In contrast, the company has not engaged in share buybacks, suggesting an alternative approach to enhancing shareholder value. That concludes the financial summary for CHABAIDAO. Feel free to comment below, and I will be happy to answer them when possible.